Good morning, everyone. We'll let everyone just give everyone a minute or so to log in to the webinar here. Cannot wait to get started. We've got just a fascinating mortgage payoff story to share with you. So we'll be getting started here in about 30 seconds. All right. Well, good morning, everyone. Thanks for attending. This is our second series in our annual series of To Catch a Fraudster. Last year was just a great time sharing insights and trends and that about wire fraud and cybersecurity, really geared towards the real estate industry. For those of you that I have not met, I'm Tom Cronkright. I'm a recovering lawyer, large title agency owner, wire fraud victim, and co-founder of Certified, and just have a unique passion to share with you the insights and bring folks like Thomas Stanley, we're going to introduce in a second, that have been through just the experience of a wire fraud and the takeaways. If you remember last month, if you haven't seen it, there's a recording on the website. We had a first-time home buyer that was affected late last year and still hasn't received her full amount of proceeds back from her recovery. So each month, our commitment is to take 35, 40 minutes, share with you what is trending, how it happened, and always takeaways that we can bring back not only into our businesses, but our broader communities with referral partners and customers that we have a privilege to serve, but we also have an obligation to protect. So if you have questions, please put them in the Q&A chat of the Zoom. There's a little box. If you hover over the screen, there'll be Q&A. I'll have that up and I may take those in real time. And there's a survey at the end. My team will not be happy if I don't mention there's a survey at the end, and that's just meant to give us candid feedback of the content in ways that we can continue to add value and level up in this area. So without further ado, we're going to be talking today about a nearly $1 million payoff that was sent and landed in a fraudulent account. We have with us somebody I've gotten to know fairly well over the last several weeks. I'm going to do just a quick screen share. And Tom, can you see that awesome picture of you on the screen?
Yes, I can.
Awesome. Guys, this is Thomas Stanley. He is the owner. He's a licensed attorney in South Carolina. He's the owner of Dunes Law Firm, and now has another unique title, being a wire fraud survivor. And we'll get into why we're using the survivor language in a minute. But I just want to applaud you before I forget, Tom, that thank you for the courage to come into the light and share candidly your experience. We don't shame people on this program. We don't indict people. We kind of wrap our arms and say, this is a community level issue. Guys, I'm an attorney. I consider myself somewhat intelligent. I was hit with a wire fraud. And this goes back to 2015, early days. So it can happen to anyone. Tom, anything else you want to backfill on your background, and then we're just going to jump right into to what happened over the last several months in your experiences with mortgage payoff fraud.
Yeah, Tom, if I'll just mention just a little more backfill is I've been doing this 25 years in Myrtle Beach. I'm originally from Horry County, which is where Myrtle Beach is located. So I've been practicing transactional law that whole time, and have steadily migrated into real estate, and we've benefited from the growth in the real estate market. And 10 years ago, we were doing maybe 30 closings a month. And now we're doing probably 150 to 170 or 180 closings a month. So we've grown with the market, but we're still a small family-owned business. And we try to communicate well, work well, and take care of our clients. I grew up in retail, and I like to talk. So you and I were talking about how I don't mind telling you my stories. So real estate closings give me an opportunity to do that. And that's really the reason, in addition to, appreciating what Certified did, I know we'll talk about that for us, this also gives me an opportunity to just tell people my story, which, I can talk about myself for a few minutes. So if it means I share bad details, then that's fine. I still get to tell my story. So I
Well, we're
appreciate
lawyers. We're gonna love on each other just hearing ourselves talk for the next 35, 40 minutes. So I'm with you, brother.
that's right. And before we get into it, I will tell you, I know this is going to be about the pitfalls and what we've learned. I will tell you, there are actually a couple benefits of wire fraud. Three things that I have benefited from. One, it frees up your schedule. So I can now say, I'm not doing that closing because I'm recovering from this wire fraud. I have to go deal with the wire fraud. Two, personal hygiene becomes optional. I know I'm a little older than that picture that everybody sees, but I've also kind of I haven't had a haircut since the fraud happened, which was right after Thanksgiving. So my last haircut was before Thanksgiving. I'm enjoying going back to the Coastal Carolina. I don't know if people know Coastal Carolina, the local football team, they celebrate the mullet. So I get an opportunity to grow that out and see what happens. And then my accountant says I'll get some money back from the federal government this year. So since we, lost so much money last year, you get a tax refund. So three positives to wire fraud that I've found. So I just want to share that before we get into it.
I can't appreciate more the point of view that you bring to this, Thomas. So,
we have to laugh. Have to laugh.
No, you don't. All right, we're going to jump in. So our agenda today is how the fraud started, and fraud will turn into plural. We're going to look at communications with the fraudster, and then we're going to spend an ample amount of time on kind of key learnings. So I'm just going to share my screen again real quick, and here's kind of a summary. And maybe, Thomas, if you could just kind of voice over this flow, and I'll be sharing and not sharing my screen just so, Thomas, we can see your beautiful face a little bit more during this session. But give us a sense of what happened with Dominion Bank. I understand that you were at a charity event, maybe some golf outing, you got a phone call, and you were read into the realization that a mortgage payoff that had been made did not land.
Yeah, so it was the day after Thanksgiving weekend. We were probably short 4 staff out of our 14 or 15, me being one of them. So we have 3 attorneys and 2 of us were out. I knew that I probably should be in the office, but I had an opportunity to play in the charity golf tournament and took it, which probably led to some of the issues. But in any event, we had a $233,000 payoff to a Dominion Financial Group or Dominion Bank. In South Carolina, the attorneys run the closings, if you will. We're an attorney state. What ends up happening a lot of times is we don't represent buyer and seller. Oftentimes, I'd probably say 90% of the time, we represent buyer or seller. Occasionally, we'll have dual representation, but in most cases, we're representing one side or the other. In this case, we were trying to get a payoff for the seller who was represented by a local attorney who stand-up attorney. She has become, I consider her a friend, and she's kind of helped me through this process. But the email payoff that went to her office was spoofed. She got the fraudulent instructions, forwarded them to us. We wired out funds to what we thought was Dominion on November 8th, but we didn't find out until the day after Thanksgiving weekend, that Monday. And then it took us a little bit of time to process it, which we'll kind of see as we go through these. So if you want to flip over, I can start kind of going through some of the emails.
No, I do. I want to go right through the email string because we have the full string. But let me walk back just a couple of clicks on setting up here. You're in attorney-driven state, and just by its nature, you'll have counsel representing seller and buyer. This is the same framework of what we call split closing states. Most of the Midwest has split closings. In Michigan, for example, where I'm sitting, we're 90 to 95% split, where it's not the attorney driving that side of the transaction, it's the real estate agent or the lender. And the setup is that you have somebody representing the seller that will typically, as part of their full service or representation, obtain that seller's payoff. And then you have another company or attorney representing the buyer. But because the buyer's representation, that title company is issuing the new loan policy that will guarantee first lien position, they have to control the entire disbursement of the file, even seller mortgage payoffs, even net proceeds, transfer taxes and stamps, because they have to, because that side of the policy requires lien protection, not so much the owner's policy that are the covenants under the warranty deed. So this is a very similar setup. I don't want people to lose sight of the fact that, oh, well, that's an attorney straight, state. This parallel is for any company relying on third-party information coming through seller nets, mortgage payoffs, anything third party. So let's jump into the communications. These were fascinating. So as I see this, Tom, and I'll kind of walk you through, but you had identified when you pulled title or were doing the attorney opinion that there seemed to be an open mortgage, but that the seller's counsel hadn't picked that up. Am I reading that first email right?
That is correct. Apparently the seller info that came in from the seller said there was no mortgage to be paid off. Yes, our title work picked that up. And so we had asked the seller for payoff information. Payoff authorization. And Tom, just as a quick aside, yes, seller, the split closings, to me, it's makes things a little bit more difficult. It's the same issue, but it just means we're a little more likely to trip things up. I can do everything right and the other party doesn't, or vice versa. And in this case, our procedure is, and one of the things I've learned is important of making sure everybody knows your procedures and following those procedures on a regular, consistent basis. But one of our procedures is we get the payoff. South Carolina has an attorney mortgage satisfaction statute that says if I'm in possession or if I get a written payoff, I verify that it's good, I send those funds and the lender doesn't satisfy the mortgage, I can file the satisfaction. So my thought is practical. I don't want to have a file open for 3 months while I'm waiting for a lender to file a satisfaction. So I know everything's been completed on our requirements and, we've cleared up the title. So we get the payoff ourselves. In certain cases, split closings, we're not able to. The lender has to hear from seller's attorney won't coordinate with us. That's, it's difficult. In this case, we didn't get it. So the seller's attorney did request it. And you can see the November 1st email they sent to the Dominion group trying to get the payoff.
Yeah, notice the spelling of Dominion group, because that's going to be part of the story here. So you had requested seller's counsel to obtain it. Hey, I think we're missing a mortgage here, a payoff. Just a couple hours later, that same afternoon, you can see this is the actual email requesting that payoff. And then a couple days later, they send to you. So this is seller's attorney counsel sending to you, hey, here's the updated payoff. And then below is what was attached to that email. And notice the spelling of Dominion group at the top. So they transposed what would be the IO to an OI, right? And then look at the verbiage here. Please find attached, revised, and updated payoff. Kindly confirm when the property is closing. This is very important. So they clearly, and you can see this is a setup normally that you'd receive in a mortgage payoff being distributed either through a fax cover page or an email. But at this point, candidly, Thomas, everything's on a glide path. This looks to be the right payoff, and you guys start to process that.
Right. So we use Qualia for our closing system. We like to think we're, relatively advanced, relatively organized. We're, up to date with technology. And we think we've got a good system. I've got, way it works is this payoff ultimately gets reviewed by an attorney, the paralegal or closer, and then an assistant, which is typically the person that's communicating with the other side or communicating with the lender to get the payoff. What I've learned in all this is my understanding, whether it be legal training, experience in business, whatever you want to call it, might be different than somebody else's. And I've got to understand that we deal with a lot of folks with varying experience with this sort of stuff, and training we'll talk about is key, because there are a couple little tips on this kind of, even if you don't catch the email, a couple things, the way it words is kind of like, okay, well, that's a little bit different than the way a lender might send a payoff. So Bank of America is not that friendly. It's just, hey, here's our information, well organized. We see the number. Let's go send the money. This is a little bit different, and that there are a couple of these little red flags or yellow flags that we should have caught during this process, but didn't.
It's easy to post game, right, and run the tapes back. It's just in real time. It's hard to identify everything. So just to line up the calendar sync here, the updated payoff came out on November 3rd to your team. And just remind me again, you had wired, was it 225 roughly to an account that landed where?
Yeah, so 233,000. I think it ended up in Santander Bank, which I understand is not U.S. based, so which creates some challenges. It really didn't matter because of the length of time between when this fraud happened and when we discovered it. But we did send the wire out per the instructions, which is also another kind of trigger, which we should have known. We should have called somebody in our process, is that the lender that we're sending the money to doesn't line up with the payoff lender. And that happens sometimes. I realize there may be some operations that outsource that payoff account to another larger institution. But anytime, we know, and we've talked about this in our regular training, is if you see something like that, that's a higher level of scrutiny. So this, you start to see there's several things start to build, and we just, in this case, we didn't catch any of these little tips. But that's one, I think, if I see an institution that doesn't line up with the loan payoff lender, maybe something's up. Let's double check this, look a little bit harder, scrutinize it a little bit more.
Yeah, so let's pull forward to how you were notified. And the challenge with mortgage payoffs is just the notice tail is much longer than what you'd have from a buyer that maybe wired money in and is at the closing table a couple days later and you realize the money didn't land, or a seller net wire or transfer that goes out and they're gonna raise their hand if they don't have the money in a couple days. This was weeks later. And essentially the buyer receives notice from Dominion saying, hey, we've got a late payment that you need to pay. Walk us through how the notice chain kind of worked here.
Yeah, and you'll see it on the next slides as well, but I think we can kind of get the gist of it, that, the seller contacted the seller's attorney, actually sent them an email, I think on that Friday of Thanksgiving weekend, saying, hey, look, I got this notice from my lender that a payment is coming due. But that loan was paid off, and I don't know if she had already contacted the lender, but she's going, hey, y'all check into this. The next slide, we see where the seller's attorney contacted us and just said, hey, once they check with the lender, then they, I'm sorry, that slide is they check with the lender says the loan is still active. And then the following slide says the instructions. Yeah. That's where we get notified that there might be an issue. We reconcile our accounts on a regular basis, being a small business. I'm fortunate. My wife is a former CPA. She's a reformed CPA, and I'm a reformed tax attorney. So we're now both in real estate. I don't know. I'm not sure kind of how that happened, but in any event, she is in charge of our reconciliations, does a great job, stays on top of it. I mean, and we know that if there's a large number that's sitting out there that wasn't reconciled, we might have an issue. In this case, we don't see an issue from our side because it reconciled. So we know we sent out a wire. We know where we sent it to, and we confirmed that the wire had actually gone through. So when this comes through saying, hey, lender's got an open file, that's when we went, uh-oh, something might be off. The next slide, the confirmation, you can see that was sent to us on Monday. And I was telling you, I thought it was Monday while I was at the tournament. I guess all this happened on Monday, but it was actually Tuesday morning when we started to kind of get motivated or mobilized. So this is the paralegal that was in charge of the file saying, hey, I was out of the office yesterday. And so she had somebody else covering for her, on that day, and going, hey, was this taken care of? Seller says, no, haven't heard. And then we knew, game on. So that was our moment of realization. I will say that next slide, Tom, where it talks about what this fraud uncovered, the realization. We knew I'm sorry.
Let me hold you back on that. So I want to, because this is the challenge with mortgage payoff fraud, is because we don't learn for weeks, sometimes maybe over a month after. So again, buyer receives notice from lender, buyer reaches out to lender saying, what are you talking about? This shouldn't be showing as an overdue. This was paid off. I sold the house. They say, no, we're still seeing it as open. We didn't receive that payoff. Then seller borrower goes to counsel, hey, could you look into this? Counsel looks into it, contacts you, and they're just trying to triangulate the information here. And then it's kind of uncovered that, to your point, you had it reconciled from an escrow standpoint, but the money was never received, kind of by the lender. Bring us to that state, because I've been there, right? When you have the realization, unfortunately, the waterfall of information, you realize there's something happened here.
Yeah, unfortunately, we've got a great staff. I mean, they care. They work hard. They are reliable and loyal. Fortunately, on Tuesday when this happened, we all mobilized. And fortunately, we're small enough where we can say, "Hey, stop what you're doing. This becomes immediate priority. What's going on here?" So they jumped in, and not only did we look at our, and one of the other attorneys actually started this, but we didn't look at just this file. We went, if we got hit here, could there be something else? So we started analyzing recently closed files, anything that closed from November 8th or we dispersed. We started looking at upcoming and ones that were funding kind of immediately, if you will. So we looked at a bunch of stuff, and in doing that, we found 5 files with similar type mortgage payoff information. Fortunately, 4 of those were upcoming. We order our mortgage payoffs as soon as we can, and if we have to get an update, fine. But we find everything's taken so long. We're trying to order things as soon as we can: certificates of assessment, loan payoff statements, that sort of stuff, early in the process. Again, we're sometimes waiting on the other side to get us information, but we order as soon as we can. And we found out we had 5 total loan payoff statements that had similar markings as this one, looked to be suspect, and in fact were. And we ran all those up the flagpole with the FBI and the IC3 claim. So we've submitted all those to the feds. Unfortunately, one of the payoffs was a $985,000 mortgage, and that had been sent out on that Monday. So the same day we got the initial email from the seller going, "Hey, there might be a problem," we had just sent out another wire with similar type instructions, markings, if you will. So different little differences, subtle differences, but the same pattern. At that point, we just start scrambling. And I won't forget the call I got from my wife going, "Hey, we might have a total of $1.2 million in wire fraud." The one we just found out about, with Dominion. And then, oh, by the way, we've got another one. So that'll stop your heart for a second, especially for a small business like ours. That's crippling type numbers. We started calling everybody, emailing everybody from our lender to our title insurance company to ultimately we ended up talking to you because other people said, "Hey, I know this wasn't a certified wire, but have you talked to Tom? Have you talked to Certified? They are a great resource." So we started first thing, I guess it was Wednesday, and then, eventually which was day 2 after we initiated the wire. I think the wire left our bank around 4 o'clock on Monday afternoon. And so Wednesday, we finally get up with you. And I don't know how y'all do it, what happens, the magic behind the curtain. You're like the wizard from the Wizard of Oz, but I don't know what goes on. But I'm thankful for it. Your connections with institutions and Secret Service, so shout out to them. I told you before, I'm a kind of a libertarian small business guy. Leave me alone. I don't like paying taxes, but I feel very, very comfortable with the amount of my tax dollars that go to fund the Secret Service, and I think they need more, because without you and Secret Service, we don't recover. So it ended up being 700,000 that got returned to our account. So I'm down 1.2 million rather than 400,000. And as a side note, the seller's attorney that got spoofed on that first Dominion transaction stepped up and actually offered to pay a sizable amount of that, felt some responsibility. We worked something out, not as much as she was willing to pay, simply because I would not have discovered this wire in time if she had not notified us promptly. So fortunately, Myrtle Beach has got a pretty small market, and the attorneys, for the most part, get along well still, especially the real estate community. So I'm very thankful to her for shooting that over immediately and not letting it sit for a couple of days, because I wouldn't have gotten. I don't know that y'all would have been able to help us, at that point. So
Yeah,
but
no, even, yeah, I guess, what would it have meant? I mean, what did it feel like, Thomas? I want to bring them maybe a little closer into view of, you're just learning of the 233, you do the recon or the audit internally, you've got 5 others that are in the pipeline that you can see have been somehow doctored or manipulated as far as payoffs. And then there's just this somewhat whale of a payoff that had just left. I mean, if you don't mind, and it's okay if you don't want to, but bring us to that, moment. What was going through your head at that point?
Yeah, and I know a lot of people have been there. I find out more and more people have been subject to it, and it's the uh, it's one of those times in my life that I don't know that I'll ever forget. I will remember where I was, what I was doing, because I had not gotten into the office when my wife called me from the office saying, "We've got another one, and this one's 985,000." And I'm doing the math, and I went, "That's 1.2," and everything kind of just stopped. I went, "Nothing else matters. This is all that matters. We've got to deal with it." And I guess at that time, I went into kind of crisis mode. And playing sports growing up, I played quarterback in high school. I'm used to kind of having to I mean, I was a really bad quarterback, but still I played quarterback. So you kind of have to, you get used to all the noise and going, okay, we got to focus on what's right here in front of us. And that's what we did at the office. I became all about kind of coordinating and going, hey, you go here and we need to do this. So we got really focused on it. And for a week, I was probably fine. I was telling everybody, it is what it is. We'll work through it. And then a week afterwards, we'd gotten some of the notice from you. Some of the money had been recovered. Most of it had been. That's when it finally hit me. And it's the since then, the emotional toll, the kind of go dark during the holidays. I didn't want to deal with anybody. My kids, I got 3 kids out of the house, a couple still in college. They were all home for the holidays. I wasn't what I think is a normal me. I think I'm a decent dad most days, but I wasn't my normal self. I didn't want to hang out with family during the holidays. So it wasn't so much the immediate toll. Yeah, there was the shock, but it was once we got over the shock that the true kind of impact hit me, and was long lasting. It was probably until beginning of January before I went, okay, I'm starting to feel normal again.
Was it because you were blaming yourself, or because that's where I'm like, when I lost, when we lost as a title company, the funds on our wire transfer, I had approved the wire personally, and it's hard not to. And I'm not putting this on you. I'm just asking the question. It's hard not to want to run the tape back and say, boy, if I'd asked one more question, or if I'd have looked at that check a little closer, or just analyze the email a little tighter, then this whole thing could have been avoided, because ours was a 2-year journey of civil litigation, federal trial. It was a hot mess for 2.5 years of our life. I mean, I agree. And when I learned of ours, my partner was on spring break with his family out of the country, and my executive assistant was reading me into it. And to your point, time stopped, and it's almost like frames. Like, if you've ever been in an accident, it happens. It was like, man, that accident took 5 minutes, because your brain just framed every single instance of what was going on. But what was it about it?
Yeah, I don't think it was a blame myself for the transaction. I don't know that I ever touched that or saw that loan payoff. But in fact, we were about telling everybody, look, this could have happened. We make mistakes. We have procedures. We call it the 4 horsemen of the apocalypse. Here are 4 things that can really crush Dune's law firm. It's not sending the state government their tax money for non-resident sellers. It's not sending the federal government their money on FERPTA for non-resident sellers. It's loan payoffs, and it's deeds, like legal descriptions. If I don't get your legal description right, and I got to come back 2 years from now in litigation and go to court, having to find people who have managed to pass away or move away and don't want to cooperate. Those are the 4 things that can really get us stuck. But I realize it's a mistake just like anything else we can do. So we really focused on letting everybody know, look, we got to keep doing what we do. But yeah, I guess, so I didn't blame myself for the wire, and we were trying to make sure nobody else did as well. What I blamed myself for was not having the procedures. We were so busy during COVID trying to figure things out. The Myrtle Beach market blew up after COVID. A lot of people were coming this way because of, various things from affordability to lack of mask mandates, whatever you want to, call it. But we saw a pretty big influx in our business during COVID, right after Memorial Day of 2020. And I feel like we've been trying to catch up ever since then, hiring people, upgrading software. So I realized we were so busy doing what we were supposed to be doing, we weren't spending time sharpening the saw, and all that falls back to me. So that's where my mind came in. But it was really, the emotional part was a lot more than that. It was just that I've got a wife and kids. Okay, how about financially? What are we doing there? My wife's given a lot to this business. We're trying to retire at some point. You talk about what that kind of loss does and what the setback is. I felt bad for her. I felt bad for my employees for having to live through it and kind of have that weigh on them, and they look at me differently, going, "Hey, I was a part of it," and they feel bad. Didn't it's just there were a lot of things going on, so it wasn't one thing. I didn't beat myself up for the actual wire. It's just I could have done better with our process and training, a lot better. And I just feel bad for everybody involved in this situation. So that's kind of it.
No, I hear you there. And I too felt just exposed. You just feel vulnerable.
Yeah.
Yeah. The money you can get your head around, but man, this could have happened again and at a leadership level at some point, right? It's all on our shoulders. So we were engaged. So I met you, and I wish I would have met you last time I was in Myrtle Beach at a bar or something like that. But we met because one of your underwriters, I would say, sprung into action, engaged us. For those of you that are not aware, we have a full recovery services division now. Last year, we were involved in roughly 125 recoveries for about 35 million back to victims. Thomas's situation being one of those in those stats. Very, very unique relationship with federal law enforcement that it's a drop everything moment for us as well. So it's almost like we're getting skyhooked out of a plane and we're dropped into just some type of a fiery field, and we're trying to quickly mobilize and determine, one, where is the money, and secondly, how do we make sure that money is not moving and we can identify it to return to the victim. We did that for you, Thomas, and we did that on the relationship that we had with the underwriter and our relationship. But what was interesting is your bank. One of the things that I'll remember most from this recovery is not so much, you had others in the queue and it was a kind of a wider scale breach of mortgage payoffs than what we normally see, but your lender was really struggling with the sequence of events and information flow to get the receiving bank to hold that account and earmark that to come back to you. And just maybe in your own words, and maybe I'm not saying this right, but in your own words, walk through that process, because that's also part of the procedure. We're going to get into like what are the takeaways and how do we level up in this area, but walk through your interactions with your bank.
Yeah, we contacted them by phone, by email. I guess it was I forget the dates and the exact times, but we contacted them by phone and email as soon as we figured out there was a problem with this wire. Our bank we love working with them. It's Sandhills Bank. They're great. I'd say regional. They might say local bank, but they are very prominent in the Horry County market. And there's some really great, local banks. I've got a long-term relationship with a guy that moved over there. And so that's who we work with. So we were able to reach out to them. I can reach out to the area executive, our banker. We can reach out to operations. I know those folks. So we emailed, we called, and they, as it turns out, it's kind of hard to figure out what's going on with all this whole process, but Sandhills used a third-party group. That third-party group took, so Sandhills requested the wire back, and then that third party actually handles Sandhills wires, and they sent that on to the national institution to get that taken, try to get the wire recalled. So But Sandhills had never had a wire situation before, or wire fraud. My firm had never had a wire fraud. So we're kind of trying to figure it out together. And I think we were both doing everything that we thought we could. And ultimately I've had sit down meetings with the president of Sandhills and our area exec, and I'm very thankful for what they did do and pleased with their response. But it goes from local folks to a national institution that has a fraud department, and you kind of become a number, not knocking the national group, but you become a number essentially, like a DMV. To hand you a ticket and go, I think the response was, we'll process in 24 to 48 hours. My local institution is doing all they can, but I'm frustrated with them because I can't see what they're doing because they're passing on to somebody else who passes on to a national lender. So it's kind of odd, especially for smaller businesses like ours, smaller financial institutions that just don't have a lot of experience in wire fraud. Although more and more of us are getting experience every day.
Yeah, I know. We're trying to slow that flow. Believe me, our certified team is obsessing more than anyone could about it. But the moral of that, and I want to pivot to some of the takeaways, is you had mentioned process and procedure. I would broaden that to what's a rapid response plan and how does that look? And in all the constituents that are involved, guys, this can be wire fraud, data breach, ransomware, any security incident. But if we just focus in on wire fraud, there is a codependency that your financial institution knows exactly what to do when an issue like this arises. And if they don't have that, they're burning daylight that could literally mean the difference between a full, partial, some sort of recovery to mitigate that loss and the money moving to a crypto wallet minutes later. I mean, we've been involved in funds recovery where the perpetrator is in the bank branch at the teller window trying to withdraw funds, and we close the account down in real time. We had that in several instances last year. It's moving that quickly. So you say, oh, today, tomorrow, the next day, they'll get to it. That's not the case at all. You can't rely upon that fact, and nor are the banks going to come to the window and make you whole for ultimately a request that, look, if it wasn't Thomas or his wife that initiated the wire and they didn't authenticate, the owner of that account, and that's what led to the fraud, that's one thing. But this is a conscious decision to move money from an account that you own to another account thinking it's lawful or it's true, and it becomes not true. So now the banks are sitting here saying, well, we'll help accommodate this, but to your point, you're in a queue. And we like to think that we short circuit the queue and we start to get information back around, where the money went. So Tom, I'm gonna show the screen just for a minute, and let's just go through some takeaways. And it's fascinating story, and very thankful that you had the result, that you did. But let's voice over some of these. And these are your words, not my words. So I thought your list was fantastic.
So this is just stuff I've kind of jotted down as we've gone through this. The first takeaway for me was have a rapid response plan for wire fraud incidents. As I learned, that plan is not the information you get from the Investors Title or Chicago Title seminar. I've been to those. We've gotten great information. We've been warned. In fact, I was pointed your way by our fraud mitigation guy, John Biggs over at Investors, who said, reach out to Tom. I had not thought about that. We use certified for a lot of our wires, but I hadn't thought to call you because it wasn't a certified wire. Yep. But have a rapid response plan. Whatever you have, detail it. So what we're working on now is details down to the bank. Who do I call? Who do I email? What other backup email? Who gets copied on that? Do I copy this third-party intermediary that handles wires? Who can I shout out to get them in motion? Who do we contact at the FBI? I mean, how do you file an IC3? We're going, we don't know. What you need to know before it happens. I thought our little plan was fine. Oh yeah. Contact the FBI. Well, exactly who is that? So we, after, I don't know, hours, we found out it's the FBI field office in Columbia, South Carolina. Well, now I've got that guy's email, his work cell phone. They may not respond, but guess what? If something happens again, I'm contacting the guy. I wish I would have dug into that beforehand. That would have probably meant that I got rid of some things and didn't spend time trying to figure out what to do. And I could have focused on the things that were most important, the people I need to contact. And plus, it helps you document. So when something comes up, and did somebody respond? Did the financial institution respond to you promptly? Were they a part of this? You've got a paper trail. So it's not just a call, it's also an email, very detailed. Bank, IT department, it's, it's your investor's title, your title carrier. I mean, it could be your E&O. That's not going to be the first person I call, because I'm going to figure out what's going on before I reach out to them. But have your list, have it detailed. I think we're going to post ours, so that not only in like an intranet or on the server for people. I think I'm going to post it in the hallway. So if somebody has a question, they can go rip that off and go, okay, who do I contact? But I can't expect my people to understand or remember every little detail. We need to provide that to them to help them do their job better and kind of help us process a situation like this. I would encourage everybody to not just go, I've got the information from the seminar. It's not going to happen to me, which leads to, number two, we need to have a plan, because the people with the most to lose know the least. If you go up the tree from us, we're at risk for losing all this money, to the national institution, which is really, they don't have a whole lot of risk. They didn't screw this up. We did. But they know the most, but they're at the other end of the line. They're kind of the bureaucracy, the bigger institutions. The smaller institutions, and then the actual title company or law firm, we most likely haven't gone through this before. So it just kind of stresses the importance of trying to figure it out, try to have a plan, because you're dealing in a situation where people may not care as much as you wish they would. They may know more than you, but you may have to kind of dig that information out, which is why I'm grateful for Certified, because y'all are kind of outside this paradigm. Y'all don't have anything to lose in this. This wasn't a certified wire. There's no exposure for your company, but yet y'all jumped in, you put on your waders and got in the swamp with me, and we figured it out. Or I say y'all figured it out. And I'll forever be grateful. But yeah, in general, people that know the most people most to lose tend to know the least. Number 3 and 4 go together. Be annoying and persistent. I was told this. It's ultimately my money. I need to not worry about offending somebody. Don't need to worry about, well, I just called them an hour ago. So what? This was the most important thing going on. I mean, you talk about the amount of money. 2021 would have been our best year ever. Instead, it was one of the worst years I've ever had in practice law, in terms of financial net profit, net loss. So yeah, it's important. It's the biggest deal I got going on. I won't, my brother, who's a litigator, likes to call the real estate practice the crack cocaine of the practice of law, because once you get a hit, and I'm sorry, that may be a little off color, but it's, once you get a hit, it's like you need another one. And that's the way real estate is. We make our money a little bit at a time. I call it the retail end of the practice of law. We're like a Target. We're making a little bit of money here and there. This is the biggest deal I got going on. Be annoying. Put your pride aside. Hubris is your enemy. I found out there are a lot of good people that care. John Biggs over at Investors, you and your team blew me away during that time, brought me to tears when we were dealing with all that, just because, and I usually only cry at football movies and movies about dogs dying, so those are my kind of triggers. But not so much the money, just the fact that people stepped up and helped me out in a time of need. Put your pride aside. It's a screw up. People want to help you. Get after it. Don't be frozen by the problem. Start working through it. There are people that are going to help you. Sorry, I got to put on my old man glasses to kind of read these. Number 6, number 5, time is of the essence. We've talked about that. You'll hear that at all your seminars. 24 to 48 hours, that money is gone. Need to move quick. Your current training is not enough. Train, and train some more. Our issues were new employees, promotions, and people covering for other people. There's a lot of gaps there. Don't assume that we had a meeting and we talked about it. Somebody wasn't at that meeting. Somebody's now been promoted into a new position. Somebody's covering for somebody else. The ironic thing about this, real quick aside, the Sandhills situation, the second one was a loan payoff to Sandhills from my trust account with Sandhills. We wired funds from one account supposedly to pay off the Sandhills account. Well, we have a process with Sandhills. We can transfer those internally. There is no wire. The person who was out that day knew that. The person who was covering for her didn't, because she was a newer employee. Well, that's on me. We can't assume people know, because we talked about it. We've got to make sure people know. Train, and train some more, and don't compromise. Ultimately, it's your money. It affects your employees in terms of a raise, bonuses, that kind of stuff. It affects all of us. Don't compromise. If you've got a procedure, stick to it. Especially when things are busy, there's a tendency to go, you know what, we're real busy. It'll work itself out. Don't do that. Don't compromise. Number 7, certified or don't wire. We wire to individuals only if it's certified. We wire to banks if we confirm, and we have a pre-approved template for lenders that we know, like Bank of America or BB&T, that we see on a regular basis, Guild Mortgage, things like that. Put those in place, help your folks out so they can look at a wire loan payoff request and kind of compare it to your approved templates or your approved list, whatever it is for your organization. And know that you've got good procedures for verifying, and that your folks they're being trained on what to do when somebody isn't an individual certified or they're not on the lender list. And then with entities, we don't wire. So if it's an LLC or corporation, you're going to get a check. I need to make sure my people know our process, and that there's no compromise on that. There's no exception. Maybe there's exception to every rule. We're attorneys, but in general, no exceptions.
So Thomas, a question
everything
came in. I want to be clear. You do have a callback procedure for mortgage payoffs, but it wasn't followed in this case. Is that fair?
Yeah, I didn't want to bore people with every mistake that we made. We talked about a couple of them as we went along. One of the mistakes that we made was, even though all this is funny to me when I look back at it, I find some humor. I have to. So we have, through Qualia Connect, through our emails to folks or messages, we have wire fraud warnings that we send out to everybody. You get it automatically. It's uploaded to your portal. It says, and then when we tell somebody we need you to wire, we remind them again, you need to check. You need to call for the number that's independently verified, that sort of stuff. We know the procedure. We tell everybody else about it. But on this one, on these two, we called the number that was on the payoff, as best I can tell. So we just, and my folks are really good. All it takes is just one. I got 5 files going on. I know I need to call this. Let me just grab it and I'll call real quick. It's Sandhills. It came from Sandhills. No, it didn't. It came from a fraudster.
Right.
Let me just pick up the phone. It's on Sandhills. I'm sure it's fine. No, it's not. So yeah, we have that procedure in place. Like I said, we've got great procedures. There was a series of little mistakes, a number of them. Any one of them we didn't make, this wire fraud doesn't happen. So, number of little dominoes had to fall, but they all fell back in November. But yeah, I absolutely encourage people to call. And if I have any doubt, guess what? I'm checking the website. If we put on there who we talk to, what phone number we call, we verified the phone number, verified the wire information. So we have notes from my staff. That's another good thing. Don't just have them do it, write it down. And that way, when I have to go back and figure out what happened, I've got kind of a starting point, if you will. I've got the history there in front of me. I know who to call, know what kind of happened on what date. But if I have any doubts, I now will go to that website, verify that number. I might even call them myself. Because guess what? I can't make $200,000 on an auto accident case because I don't have those. That's a lot of closings to make $200,000. I've got the time. So yeah, but that's a great question. So everything is at risk every time, every wire, every communication. Don't assume anything's valid. In fact, I tell my people, be a little bit cynical, assume it's fraudulent, especially when it comes to money. Number 9, team up with certified. Y'all do things, Tom, that other people simply can't. Y'all care. Y'all been there. As I've learned, I've appreciated your input and your guidance, your feedback. I appreciate what y'all did for us, but the fact this wasn't a certified wire and y'all still jumped in, you guys are a lot more than just a business partner. Y'all are standing up for title companies and going, hey, been there, I got your back. So yeah, I'm very grateful. I'm waiting on y'all's service with loan payoffs. I told you I'd be an early adopter. I'll be glad to be in the, whenever y'all can roll a service that kind of service out, I'm your guy. We'll help happy to kind of test that out. Mortgage payoffs are a top fraud target. We all know that. We need to remind our staff that as well. And then I added one more, the wire fraud insurance. I don't know that it helps, but I kind of poo-pooed wire fraud insurance because I went, the insurance doesn't like to cover anything. And I made a mistake. They probably wouldn't cover this. I didn't follow our procedures. But look into it. Talk to folks. That's how we ended up with certified. It's because Investors Title had mentioned that they were partnering with you. And I'm very grateful for that partnership. Like I said, we won't wire money to an individual if they can't complete the certified questions. That's just our protection. I've got y'all's insurance behind us. So I've got that protection on every wire, which I can, it's a nice thing to put under your pillow and fall asleep to, that I'm protected. There's somebody standing behind me financially. But yeah, look into that. We're in the process of doing that now, trying to figure out what's out there. I just haven't done enough because there's a lot of other things with wire fraud that require your time, like, borrowing money from your bank and giving them documentation they need to get this whole thing set up. So we're getting through all that. Wire fraud insurance is next on my list. So I add that as kind of a little bonus. I don't know. And if anybody's got any ideas on what does and doesn't work, I'd love to hear from folks. I've got the time to talk to you or hear from you by email. My email is tstanley, TSTANLEY at Dunes Law Firm, Dunes like sand dunes, lawfirm.com. Happy to hear from you. If y'all got questions or ideas, listen, I'm learning. I realize there's stuff I still don't know. So I'm happy to get any other feedback or input or suggestions, and maybe we can be a little better next time.
No, great tips, Thomas. And thank you for just the courage to share your story. I want to add just a little bit of color on something you said, that, mortgage payoffs are a top target. I looked up earlier this week, the average loan balance across the country is just over 299,000. So these are big swings of cash. You had $1 million and then 233. So, in a blender, it's higher than that on your averages. But we're in the middle of a situation right now that developed about 30 working hours ago, where an electronic fax service appears to have been compromised, and the fraudsters, when the faxes were coming in from the mortgage lender or servicer into this email fax service to then get sent to the title company or the office, they were being picked out before they were transmitted into the email box, doctored up, and then reinserted. So I'll have more on this. We may do a full webinar on this because I can't disclose now, but this is a massive breach. One of the largest we've seen on payoffs. We saw a very similar setup last year in the Nashville area, about a handful of payoffs, similar situation. So I wanted to let the group know something that we're seeing now in bright light is, if you have a fax service, eFax, GFI fax maker, I don't know which service you use, have your IT company go in and look at those settings and make sure that you have complex passwords, you have triggers if any settings or redirect rules have been set up, if there's multi-factor authentication or some other security hardening that you can put on those. It's going to be very important. What I'm talking about is, you're dialing the number, you have the borrower off, you're keying in that information, and then the mortgage servicer or lender is saying, great, where would you like this faxed? So you have typically a login to that service where you can go and set up settings. Well, I want it to go to this email after it comes through, or I want it to this distribution group. Go into the back end and make sure that that account is hardened, because my fear is that we're going to see more and more breaches where the fraudster says, look, I can go onesie, twosie, or I can just set up a 5-day run after a month ends, and I can just smoke an entire company in 5 days because I'm going to redirect all the payoff wires. So it's a huge problem. Thomas, I can't thank you enough. I lost your camera there for a second, but I wanted to thank you for not only participating, but sharing your story and your insights around your experience. I'm also glad you reached out. John had connected us, and I'm going to take you up on that dinner next time I'm in Myrtle Beach. So
Absolutely.
yeah.
Hey, listen, my camera may have gone out, but at least I don't have a cat head like that. That attorney had to be from the South. I don't know if you saw that. The guy that had he told the judge, "I'm not a cat," because he had a cat head on there.
Oh,
So,
that's
I mean,
right.
camera off is not as bad as having a avatar or something like that. So we'll take that.
Fair enough. Well, guys, next month, we have another business, an actual social influencer whose company got hit with a wire fraud. And this is going to get into some of the vendor payment fraud, similar situation. But at the end of the day, we're going to share another fascinating story from late last year from a victim that's also willing to come in and kind of share their insights. One last question that came in. So the question really is around, was it the seller's lawyer that was hacked, do you think, Thomas, or where do you think the breach point was? Because they didn't just pick the mortgage payoff out of thin air, right? I mean,
Yeah.
maybe you don't know, and it's okay if you don't know, but just trying to circle back on where do you think the breach point was? Real estate agent, seller's lawyer, any insights there?
Yeah. Original breach point was between Dominion and the seller's attorney.
Okay.
So that's where it occurred. And once it kind of got in and they realized we would play along, that we were, willing victim, if you will, then they started directing stuff to us and primarily to the email address that they saw the original payoff had gone to, and confirmation kind of came back out of. So yeah, it was originally between the lender and the seller's attorney. Another reason why I don't like split closings, because that's just one more thing I have to worry about. What's your system? Now, in terms of the actual kind of breach point, we don't know. I've talked to Dominion, and they say their IT department cleared them. It wasn't on their end. I've talked to the seller's attorney. They feel like their IT person said they're clear on their end. My IT guy did a complete overhaul and kind of review of our system. Couldn't find a breach point on our end. He said it's somewhere out in the internet. Who knows? And, it could be through Office 365 and, some kind of exchange. Who knows? I don't know where this stuff goes, but that's another thing. We think we're sending out encrypted emails, and guess what? Somehow they're not, or what's coming back is not. So, yeah, I don't know the exact breach point. I just know that the initial breach was third parties that we weren't involved with. We just got the bad information and acted on it and brought ourselves into. And by the way, this was I think from what Secret Service and you have explained, this was a pretty sophisticated operation. These guys knew what they were doing. We think all these wire fraud requests were, related and coordinated. So yeah, they found a chink in the armor, and they went, got it. Let's go back to that spot.
Yeah, it's easy to try in the second half of this question that came in, isn't that on the seller's lawyer? Is it on you? And my answer would be yes. I mean, we don't have precedent. This is such a new area. There's standards of care, and there's potential, negligence, contributory negligence. I don't know what it is, but it's a very, very complex area of the law. And you can't, I mean, I hate to say this, but you can't litigate over 200 grand. I mean, not fully to a full decision. You would just pivot to settlement. And that's unfortunately what we're seeing in these. So yes, I think somewhere upstream, somebody had a hand in it. We've got procedures that could have been followed that could have mitigated it. It's easy to run the post game, but I think it's a good reminder that all of us play in that role. So if you're a company that is just sending mortgage payoffs to the buyer side and they're relying upon that and your system is breached, I also wouldn't just sit back and say, well, they'll call. I don't have to make sure this information is good either, because I think there's a contributory factor that, look, judges are busy and they're not super intelligent, right? So they're going to scratch their head saying, get this out of my courtroom, right? You pay a little, get this thing gone. We're no world where we're going to go to trial on this thing. It's too complicated.
And Tom, the way I see it is we're the settlement agent. We're the closing attorney. We're the ones responsible for disbursement. So ultimately, every dollar that leaves my trust account, it's my responsibility to verify. So maybe I put more responsibility on myself than a court would, but I'm with you. I'm not a litigator. I don't want to spend 2 years fighting over it. I just not going to do that. Let's figure out, let's own up to it. We messed up. The seller's attorney said the same thing. We messed up. We came to an agreement. She and I worked it out, and we moved on. Yeah, I don't want to be fighting over this. And so the answer to me is, let's fix the system. Let's improve what we do. Let's sharpen the sword and make sure this doesn't happen again. So I don't have to worry about it. Whose responsibility is it? Because I agree. There are other parties. It could be Dominion for all I know. It could be, maybe some kind of email server, IT company. I don't know. Ultimately, it is I'm the end of the line. Buck stops here. And we don't get paid enough to take on that much responsibility. But guess what? That's what I signed up for. So let's do our part and verify everything that we send out.
Yep. Love it. Thomas,
yep,
thank you. Good to see you. Yep. Good to see you again. And everyone, we'll see you next month. Enjoy the rest of the day. Take care.
Yep. Thanks.